Hi everyone, my name is Rishad. Today is the 3rd of September 2023 and I'm making my weekly prediction for SPY. As usual, I'll be going over the monthly, weekly, and finally the daily charts and then giving my final prediction for SPY and going over the requirements for the entry and exit of the trade. And now, as usual, it's important to make the disclaimer that all information in this video is completely educational and therefore taking trades based solely off of this information is highly unadvisable, and it's important to do your own analysis before entering a position, which can result in hefty losses if not considered carefully. On this note, we can start the video and we'll go over the monthly charts first. Clearly, we can see that the market is still in a strong uptrend. Now, the month of August did end, so we can now predict on this month. We can clearly see that it's more of a shooting star kind of pattern where we saw that it opened below the close of the previous month, went low, really low, and then the market rallied up all the way to actually go above the resistance. Now this is in itself, it's a red candle, but if you think about what the candle indicates, it's actually quite a bullish signal because it shows that the market went through a strong downtrend which was then revoked by the bull's strong momentum. And we can see this in a bit more detail as we head to the weekly charts. Here we can clearly see this is that trend line. The market has steadily been going up now. We can see that it had the last few weeks before had a strong downtrend. We're the starting of a downtrend, but then the last 2 weeks have shown two strong green candles. The first one was an engulfed candle. As you can see, this week has clearly broken out of that range, the mother candle's range. So if you want to trade weekly, again, this is a strong bullish signal. Plus, again, if we look at the RSI here, we can see that the RSI is approaching the average, which when it does cross the average is again a strong bullish signal as well. So far we have a lot of bullish signals. We can see that this week clearly broke through the mother candle for the inside bar, which again, strong bullish signal in off candlesticks. Now, let's head to the daily chart. Here we can see that we have an upward channel now, not like last week where the market action was largely downwards. We can clearly draw now an upward channel, and we can see that the price action for the week has clearly gone over this resistance, and it's currently still over the resistance, but we've seen two consecutive red candles. Now, this can result in a whipsaw, so we do need to be safe. And in order to do this, we can place a breakout zone. So we clearly can take the high of this candle as the resistance, which is at 453.67. So obviously if it does break this, then we have the continued upward momentum, and that's perfect. That's all we need. However, if the market does end up going downwards, we need to be extra safe, and we cannot just have this support as the benchmark. We have to take the low of this candle, which is at 449.68, or if you want to be even more conservative, you can take the low of this candle at 448.78. And then you wait for the breakout, and then whichever direction the market does go in, we can take a trade in that position. The RSI string is still strongly above the average and has not yet declined. As we can see, it did go down here, but then it's gone back up. So we can still say that the RSI is confirming the upward action that we're seeing so far. Now let's head over to the Excel sheet where we can go over this prediction in more detail and talk about the entry requirements and the exit requirements of the trade for the coming week. So the trade that we're going to be entering, currently obviously we're not taking a trade. We wait for the candle high or low to break out. So specifically, we buy when it crosses the high at 453.67. We sell when it falls below the low at 449.68 with a target of 1% or 0.5% if it's the last day with a trailing stop loss, of course. If the target or stop loss is not hit and we have entered a trade, then we take the closing price on Friday. And the max OI for the monthly expiry is 460 for the CE at 77,506 and 430 for PE at 159,212. Now we can clearly see that the CE has gone from 450, the CE is the same, but the PE has gone from 400 to 430. So people do expect that the price stays above a much higher threshold. So we can take that as a bullish indicator from the option chain as well. And the monthly put to call ratio is 2.38. The max OI for the weekly expiry is 420 for the CE at 23,501. And 405 for the PE at 1,026. Now here, the CE and PE values have changed, so we can negate the signal altogether. But we do have bullish signals from the candlestick and the option chain. So overall, we can see that the market does show quite a bullish sentiment so far, but it's important to be safe because we're quite close to the possibility of a break of support, so we do need to be safe if this event does happen. The price action is the upper channel, obviously, that we can see in the video. The weekly trend is currently up, and so is the monthly trend. Although that is subject to change depending how September does go, since then we can start to predict a downwards rally as well. But since the month hasn't ended, we can't go over that yet. And to conclude the video, we'll just go over last week's prediction and the trade that we actually entered. We actually did enter a buy last week on the 30th. With the entry price of 449.51, we took a total of 229 as the quantity, giving us 102,937.79 exposure. The exit price was 451.19, so we did make a profit, although not 1%. The closing price gave us around 384.72 US dollars, leaving us with the weekly closing balance of 103,636.15. And obviously, once this week ends, next week we'll go over this week's prediction, and I'll give you the review of the profit, the loss, and what obviously I learned from this week's prediction as well. But until then, I'll see you next week, and thank you for watching.